Hi folks, this is Jeff Gorton from Gorton Financial Group with our May 2013 Economic Update. In this video we'll discuss a few of the events that drove markets in May. We'll also look ahead at what might happen in the days and weeks ahead. Please stay tuned at the end for a required disclosure statement. The markets were able to end May in the black despite some weakness in the last days of the month. For the month, the S&P 500 gained 2%. The Dow gained 1.9% and the Nasdaq gained 3.8%. Earlier in the month, the Fed announced a general plan for tapering its quantitative easing program as the economic recovery continues. Markets became volatile in the last 2 weeks of the month as investors processed this news. Fed Chairman Ben Bernanke clarified that the Fed would not be rushing to exit, but would tighten monetary policy cautiously as economic conditions improve. Many analysts believe that the Fed's bond buying program has been propping up markets, meaning that a withdrawal of Fed support could cause markets to slide. While it's good news that the Fed isn't shutting down its bond program immediately, we can expect additional volatility in the coming months as markets prepare for the end of easy Fed money. Overall, economic data was positive in May. We got another look at revised first quarter GDP, which came in at 2.4%, down from the 2.5% initial reading. The downward revision was expected due to some slower inventory growth. Consumer sentiment for May beat expectations, reaching the highest level since July of 2007. On the downside, the last weekly jobless report for month showed an increase in unemployment claims, meaning that job growth looks to have been essentially flat over the last 2 months. As first quarter earnings season wraps up, we can say that it was a pretty average earnings season and nothing to get too excited about. Profit margins are slightly up for the S&P 500 overall, but once you take out the financial sector, margins are down for all other sectors. While about 2/3 of S&P 500 companies were able to beat profit expectations, only 40% were able to beat revenue expectations, meaning that demand was still soft and companies were able to achieve profits by doing more with less. In looking ahead, we may see continued volatility as investors digest economic data and continue to monitor Fed actions. Markets have responded well to positive economic data earlier this year, but concern about the Fed may cause investors to react in contradictory ways. As always, we'll be watching closely and looking for investment opportunities as markets move. Once again, this is Jeff Gorton with Gorton Financial Group signing off for the month of May 2013. I hope you've found this commentary interesting and informative, and we'd love to hear what you have to say in the comment section below. If you do have any questions about what you heard in this update, or you would just like to discuss your personal financial situation, please give us a call at 405-681-9633, and we'd be happy to talk to you. Well, the following is a required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.